Mark, US stocks, the S&P, back in positive territory for the year. I know that US stocks, not your favourite pick. They've already gone further than you thought they would go. But when you listen to US stock bulls, are there any arguments that they make that give you pause for thought?
Yes, absolutely. I think, first of all, you made the point, Anna, this relief rally, which I was anticipating, has already gone further than I expected, about 3% further roughly than where I thought we'd roughly stop. And there are a few issues that are concerning me as someone who was expecting kind of the next leg of the bearish trend to kind of commence. And that is the fact that, well, for a start, the rally triggers some more technical signals. You just have some follow-through momentum now. I think that the Saudi deal, while it seems like it's already less, maybe might be less impressive and less quick than maybe some of the initial headlines, was an extra win I wasn't expecting. Of course, the US-China trade deal surpassed elevated expectations. So I think there have been a few wins recently. And the fact is, China-US trade hasn't collapsed off a cliff quite to the extent that people worried about. Yes, it's dropped a lot, but we've seen drops of this before. It's nothing too dramatic yet. So I am a little bit concerned. It feels like the hard data slowdown from tariffs may not come, be show up till May, which we kind of always thought, May or June. But that means we won't actually see that data in prints until maybe, July or June at the earliest. So I'm a little bit worried the squeeze might go a little bit further. And therefore, given that I'm getting the short-term direction is not working out as I expected this week, I'm kind of pulling back from the short-term calls, and I think that I'm retrenching to the longer-term ones this year, which I think remain incredibly strong, and that is bearish dollar. It is generally a tough environment for US Treasuries, and it is that US stocks will continue to underperform global stocks, as they have for the last couple of months, and those trades, short dollar and bearish dollar and the idea of US stock underperformance, are trades that have worked well for the last months and will continue to work well.
Doesn't sound like we're going to get a lot more volatility, though, from what you're saying. Is the volatility story done?
It's interesting that there's not much data quickly on the horizon. We're going to start getting retail sales. I'm wondering where the next catalyst is. And that's the thing is, dip buyers have won, particularly in the retail sector at the moment. And that's why I'm a little bit more hesitant to reiterate my kind of bearish view that I have for most of the last week, in terms that what is the catalyst for us to get negative now? Now, there are going to be some catalysts, but when? And so those three things I'm looking for is, I think the fiscal story will get people worried about yields. The fact is, the fiscal situation is getting worse this year, despite all the headlines from DOGE. So that's going to raise concern about yields again and yield curve steepening at some point. But when? That might be another month away. Hard data, when that turns lower, and I'm expected to, that'll be dramatic. But again, that might not be for a month or so. It could be as soon as retail sales this week. I'm not expecting it. It could be on jobs data sooner, but I can't definitely predict that. So data, and fiscal situation. And finally, I'm expecting the marginal news flow and trade to turn more negative from here. So that's the other catalyst. But I can't predict timing of any of those.